A top Wall Street strategist gave us a viewpoint of what's happening in the financial world. Joining us now is Mandy Xu. She's Chief Equity Derivative Strategist at Credit Suisse and a very welcomed panelist here at Cboe Risk Management
Thank you. It's always great to be here.
Well, you are always terrific, and you always have such wonderful insights about the market. What are you seeing right now, Mandy?
I think in terms of, to start the year, what has a lot of people, puzzled is in terms of investor positioning, right? Because we had a very brutal 2018 and now a very sharp rally to start the year. So the number one question I've been getting from clients is to what degree have investors re-risked in this rally? And unfortunately, so far, we haven't seen too much evidence of re-risking, right? And that has implications going forward in terms of how much dry powder there is on the sidelines. So in terms of the prime services data that we get, we're seeing hedge funds, gross exposure still near the lows, and net exposure actually coming down in this rally, meaning people are adding to shorts. They're still very cautious. They're still very skeptical about this rally. So I would say that's been, in terms from the positioning standpoint, the kind of the main theme of this year. And then on the vol side, it's just been the quick and significant normalization of volatility that we're seeing across asset classes.
Right. What are you seeing there? What are some signals?
In the cross-asset space, so one of the things I talked about in my panel was how equity investors can use signals from the cross-asset vol markets in terms of investment decision making process. And one of the key takeaways from last quarter and last year specifically was, if you recall, in the fourth quarter, the headlines and certainly the conventional narrative was that it was a very macro-driven sell-off. It was very much driven by recession fears, by Fed policy fears. But what I showed in my presentation was actually, if you look in the cross-asset vol market, it was telling you the exact opposite story. So vols and asset classes that you would expect to go up in that environment not only did not go up, they actually fell. And what the market was telling you was actually, it wasn't macro. It was about idiosyncratic single stock risk, right? It was about earnings and equity fundamentals. It wasn't about a Fed or growth-driven market. So I think that's one of the ways that you can use cross-asset signals in terms of kind of making decisions.
I can see that, especially with some of the bigger players like Apple and Facebook and some of the big stocks that we saw.
Yeah, they had very big moves in the fourth quarter, and one of the things that was very notable was, index volatility in equities actually underperformed in the sell-off in the fourth quarter, whereas single stock vol was the big outperformer, right? So single stock vol ended last year at a 5-year high, higher than 2015 when the VIX was at 50, right? And that's something that get lost in the story, lost in the headlines, was that actually risk was on the single stock side of the market, not the macro, not the index side.
What's your outlook?
For this year, I would say, our outlook is a bit more constructive versus maybe the street or versus median expectations, mainly because our house view in terms of economic growth is actually fairly constructive. So we expecting the current slowdown in global growth to bottom sometime in Q2 of this year and then to pick up in the second half of the year, going and continuing until 2020. So on the basis of that more constructive economic outlook, we're expecting realized volatility for S&P to come in about 2.5 points for the year. So a 15 vol forecast for 2019 versus a 17.5 realized vol level for 2018.
And quickly before you take off, what's your takeaway?
I thought it was a great panel in terms of hearing from different perspectives, right? And we all talked about factors such as positioning, liquidity, correlation. I thought gave a very good and wide-ranging perspective on what was driving markets last year and what investors can look forward to this year.
Happy to have you here. Thank
you so
much, Mandy.
Thank you.